Hey, what's up, everybody? So, I just wanted to come on here real quick and just do the weekly breakdown. Again, we're still just kind of getting through the rest of this year, and I'm gonna have a revamped system on how we're doing the chart breakdowns and the weekly calls. But we're gearing down the rest of the year. So, again, I just don't want to overthink this too much and have too many like videos going on as we get ready for 2026 and the rest of the year. So. Like I said before, I'm probably going to trade through the month of December like I've been like the last year or so, but really just very passive. So again, what I want to do is just kind of take you guys through some of the Forex factory situations and see what's going on for the news this week. Again, we came back from the government shut down a few weeks ago, so all of these red folders are now back in full effect. So I just want to walk through what's going to be happening at the beginning of December. Again, normally we see at the beginning of December start to see the end of the volatility go. And in past years, I usually shut down the trading for the year after the week of Thanksgiving. I usually take the whole month of December off. But again, we're trading through December this year, so it's all good. Um, so I want to look at again ISM PMI. So again, this is going to be the red folder news. And so what I do with these Forex factory checks is really just see like what the red folder news is going to be for the week, and then what's these are days and times that we should be looking out for, maybe days that we shouldn't trade, and then really just try to figure out when the volatility is going to kick in. So we kind of plan our trading week around that. So I know this is going to be an NFP week since this is the first week of the month, so that means most likely I will only be trading on Monday, Tuesday, and Wednesday of this week, and really looking for opportunities to maximize that. So as we go into the first, we see that there's a 9 a.m. red folder news on ISM, so that means there could be some volatility kicking in right then and there. AUD will have some stuff going on in the Asian session on that Friday, their GDP call. That Thursday, we have non-farm employment change, which is like a precursor to NFP, and then a ISM PMI again at 9, and then some red folder news on CHF. So that's not really worrying about that. I'm really focusing on the red folder news releases for the USD, and then since I trade Euro and I trade GBP, I'll look for anything on those as well. So really just some red folder news on USD and at 9 and 7:15 on Wednesday. Some more unemployment claims on 7:30, and then obviously oh, that's weird. I guess NFP is on Wednesday at 8:30. That's weird. That's really weird. Usually it's on Friday. Oh, this isn't the actual. Yeah. This is usually like a precursor to NFP, but for some reason NFP isn't listed here yet. So we'll see what happens. So either way, I'm gonna still treat this as an opportunity to be done by Wednesday, uh, at noon, and see if we can get something lined up. If there's something very, very clean, we'll take those trades. But okay, so looking at the actual charts again, let's go back and look at dollar. I always start on dollar index because if I get understanding of what's going on with dollar, we can figure out what's going on with the rest of the currencies. So basically, couple of things here that I called out, right? And I said last week, coming into the week, we did take this last area of liquidity a few weeks ago, back in the high of November, and then again, late November, like about 2 weeks ago. So we did run this high, and we were failing to stay above this high. And so I said a couple of things. The first thing I said is because we are on an uptrend, right? We have to stick with this idea that the market's going to run higher. But what I'd said, everybody, if you look here very closely, you can see that I had this fail-safe level, which I noted at around like the 99.66 level. And what that was for me was really just this level that said, if this market inverts this, then most likely we probably going to keep running lower, right? And so we inverted this fair value gap here. And you can see that we basically inverted this daily one as well. We traded back up into here on Friday. And so what I want to see here is the market really continue to break and go lower. It's not a full clean daily break of structure, but you can see that we are getting 4-hour breaks. We broke this initial one, traded back up here and broke structure again. So what am I looking for this week? I would love to see the market retest this fair value gap here and then really look for an opportunity to keep running lower, right? I think we're back in line with this bearish trend. I did call this out on Friday, and I did say, well, actually, this is last week I'm thinking of. But we did trade below this low here, trade back into this range where we took sell side. Uh, so we did do that. But I do want to see the market trade back up into this gap and then run lower. That's ideally what I'm looking for this past so over the next few days, to a week. So definitely looking to see if we can target these lows. Again, I'll be looking for a couple of levels. First level that I'll be interested really if we can get down to is the low of last week, right? Which is the Friday's low. But then I'll also be looking at this low here, which is our swing low on the daily time frame and see if we can make an extended run down here. Right. So that's ideally what we wanting to see. Now whenever we play these areas like this, right, it's again, you got to stick with a long-term bias of bullishness, right? Just because it rejected from a level doesn't mean the market can won't go right back up to that level unless we get a clean break of structure, we see any type of fair value gaps or anything like that, like inverted or something that lets us know that the market doesn't want to respect the levels any longer and it got the liquidity it needed, right? And so in this particular case, we see the market really running lower. And so we want to see the market really again tack these lows and kind of transition back to that downtrend we have been pretty much all year. Um, Again, I'm looking at these at levels of sell side here. Again, the most recent level is 98.85, let's call it 87, let's call it. And then obviously these lows down here, where we know there's going to be some orders and liquidity resting. So that's first and foremost what I'll be looking for. And now that we know that we have what we want to see in dollar, we should be able to kind of pair that up with euro and the rest of the currencies. So first and foremost, if that's the case here, and we see the market wants to run lower, then we should be looking for a potential bearish or bullish dollar or bullish euro USD or bullish euro, and a bullish GBP as well, right? Because same scenario here. If I get rid of these charts, you can kind of see the same thing. We had this very clean bearish fair value gap that we inverted, retested, and are on our way to the highs here. So what I'm going to be looking for is I'm going to play this very conservatively. So I'm going to be looking for the market to run up to here. That's only about a 60 pip range. But the way that we can see here, if we zoom in on this fair value gap, you can see that this market really rejected from this level, came down, retested it a couple times, and ended with a very strong close on Friday. I want to see how the market reacts when we come to this level here. We potentially could go a lot higher than this. I can see the market's definitely found like a level of support. Some people will call this like a head and shoulder or inverse head and shoulders. Some people will call this as like a break and retest. We came back down to that fair value gap and we're finding support in old BISIs and then inverting old CIVs, right? BISIs being this gap here, right? That BISI here. Again, if you don't know what that is, can't help you. Get in the mentorship. Um, so right down there, respecting that level pretty much perfectly on the dot. Like we see the market closes. Nothing really closed below this last week, but we can see the average closes are like right on the midpoint of that gap. And then so we're respecting old BISCs and disrespecting old CIVs. That's the clear sign of an uptrend, right? Obviously following market structure as well. So I want to be looking here as the target for this week. See if we can get a good trade to that level. It's about 60 points. Maybe we start out the week by retesting this low or retesting this gap one more time and then take things there. If we get an extended run, I'm going to really be looking at the highs. This is the second level that I'll be looking at, seeing if we can come back up to that high there. So I'll say like second target, right? So this could be us finding a level of support going back up to these highs. Um, Keeping in mind the end of the year is here, so we pretty much have like 4 weeks left of trading in the year. So We might just dance around in here for the next week. I mean, this was 3 months of price action, so we could just be dancing around and see what internal liquidity inside of these ranges, this low to this high that we can take. So I'm not trying to over project here. I am aware that we are not gonna have amazing trading situations for the rest of the year. Again, we will see some obviously rough older news, but this is not like the middle of September or the beginning of the year trading, right? So let's look at GBP. I'm gonna go to GBP really quickly. Same thing here. I mean, this if this isn't telling you what's going on, I don't know what it is, right? This huge wick. Again, coming into last week, I wanted to see the markets find a reason to go lower. And I want to see if it's the same on GBP USD. Yeah, it's the same, pretty much the same. So we haven't fully inverted this. So I don't like this as much as I like Euro. But I do want to see like a full inversion of these gaps before I uh, committing to long biases on pound, even though they should be flowing in the same direction. I do really like this though, right? If you're trading the pound futures, uh, I do like this because it shows that there's a lot of rejections. It's a very strong wick from this area, and that we could keep running up with this. So I'm going to be sticking with this bullish bias. There's a couple things I'm seeing here. So you have this trend line liquidity built up. I'm going to get rid of some of these gaps so it's easier to see. But in this particular lens, this could be, even though it looks like we had been on a downtrend for a while, we could be transitioning back into an uptrend again. I want to see some daily confirmations here. We did technically break structure here. We are on the verge of inverting. Oops, what did I just do here? So I'm doing like crazy. We are in the verge of like inverting this gap too. So there's two levels here. Again, there's this order block here, but I would imagine with this wick that strong, I mean this wick is like almost 200 points. So I would imagine that this is telling us that the market doesn't has no desire to want to go back down there. So I'll be looking at this buy side or this trend line liquidity here. And then, obviously this high is the overarching like target. I'm just gonna say ASL. That's at 1.3475. But I also will be noting how we react to this level here. That's the only other level that I'm kind of cautious about because I do want to see a full inversion of these fair value gaps here, right? So I would love to, if this is, we're currently trading at 324, uh, I would be okay with, um, another waiting until the market inverted this. If it's a very clean setup, I'll take it, but um, I mean, ideal scenario would be something like this. This is the market. Maybe it starts out the week by running a little lower, does something like that, kind of trades back into this range here, and then rejects it and then gives us a clean shot to that liquidity that's sitting right there. That would be like the ideal best case scenario here. Um, just with this wick being as big as it is, I mean, this is, you know, I don't know if we'll get a full retest, but I will be looking at consequent encroachment of this wick here. Something like that, yeah. After a while you see consequent encroachment so long on wicks that you kind of can just mentally see where it's at. But yeah, something like that, like ideally. If I jump down to the 4 hour time frame, same idea here. We came down, swept these lows. I don't think we want to go back down. I think we're kind of in a transitionary state where we want to look at least, to maybe this level here. We'll see. But just again, judging on how big that wick is, I would I'm really looking here. So if I can get something to respect this level here, that's definitely gonna serve as a potential long entry for me. So that's GBP. Let's look at Nasdaq again. You guys know that I'm really refraining from like trying to take long-term trades on Nasdaq or long-term biases right now, and mostly just looking for good intraday setups. But with this being said, I mean, I'm gonna show you guys what I think about this is going on long term. Now we know indices in general. are just a long-term investment vehicle. So we know that uh, the market is not going to um, go down long term over years. It could have like weeks, months, seasons, or even a year where it's down, but traditionally there it does go up over time. Last week I said I wanted to see a couple things happen that we got. I wanted to see this invert. I said I needed to see this fair value gap invert before going bullish. If you would have waited on me, you would have missed all of this, but that's okay. But you would have been able to take maybe a 300 point trade to the high of this. Yeah, about 250 points. That could have been a good setup there. Or maybe you're still long in the trades, right? And you're holding to maybe this high. So what I'm looking for, there's a couple levels here this week that I'm looking at. First one will be here. It's about 300 points out. ESL one. Second one is here. Actually, I'm gonna take it back. I say second one is here. The reason I'm looking at that for this one is because of these relative equal highs. If you look here, you can see these relative equal highs right there. So if we take this, we're probably going to end there. So I'll be looking at that. Either way, we're still sitting about 400 points from where we're currently sitting. And then obviously, I mean, if we can get a run all the way back up to the high, that'll be the third level. I mean, it could happen. I mean, it's only like 1,200 points out. So it could definitely happen in a week, especially with NASDAQ. So I'm looking at these three levels just to kind of see. And again, when price hits my levels, usually I get flat, kind of take a step back, react to them, and see if this is something that we need to, get away from, or is it going to keep running cleanly through? Like, is this the ultimate draw on liquidity, right? Or is it going to keep, not do that? So secondary thing, so that's NASDAQ, ES, though, again, you could have held this. I know there's some students that were bullish here from the start. Again, I get cautious, especially when we trade into an overarching CIVI and a downtrend. I do uh need to see something invert or something price fail to respect something before we go higher. So again, I was cautious on this, but I think us being inverted here kind of set the stage for us potentially even running back up to these highs. So excited about that. We'll see what happens. Um, I mean, same thing on ES. I mean, coming into last week, this was our week, pretty much. So same thing happened here, right? Like we inverted this gap, a little less of a target there, but we kept running up. So ideally, what I'm looking for on ES is this. Let's see if we can take this high this week. Something like, potentially where we could trade. I don't know, man. Maybe we see something like this. I doubt we go that deep that swing, but there's a very open fair value gap this higher time frame. There could be some money resting. So maybe something like that, just a deep run to get to shake people off and then to attack those highs. Or we uh, retest this inverted fair value gap, right? So either something like that could be the move. We did trade into the civvy here. We did respect it, so something like that could be the play. But I'll leave this up for now. And with Nasdaq and the indices, it's more about me trying to capture a good move based on the bias that we have versus me trying to predict the overarching week, right? Stuff is so sporadic right now, and we're in a time where this is never like a lot of stuff has never happened before. So, um, yeah. So let's look at YM. Now, YM was coming into YM. This was actually the one that kind of tipped me off to the idea that the market might go long for this week because we had already inverted the fair value gap that it took us a long time to do on the other two. So coming into the week, the Monday I saw this happen. So I was like, all right, this is probably a strong sign that the market could run up. And if you guys go back and watch last week's recording, you can see that me kind of almost changing my bias in real time because of this. So, because I initially was like, I want to see these markets go lower. And then I said, okay, let's change it and let's just say if the other ones invert and respect, and then we'll go long if that happens. Um, But again, if you don't know what's going on in the markets, then it's okay. You just need to stay out until you do. That's all. So what am I looking at this week? We traded up into this civvy here. I would like us to invert this civvy and go long. I don't like these setups. I don't like the setup as much as I like the other ones. Because we're already sitting in an area of liquidity in this civvy right here. So I'm gonna kind of say the same thing here. Uh, Need to invert. All right. So that's kind of what I'm seeing there. Um, yeah. So again, want to see this inverted before long, before going long. And yeah, so that's ideally what I'm seeing. I don't like this setup as much as I like NASDAQ because we're already pretty much inverted that gap there. And ES is the same. So far out of everything I've seen this week, I actually like Euro the most. I like Euro because it's giving us clear bullish structure. Um, it's letting us know that we could be transitioning to an uptrend. So far I like that one the most. Then I probably would say GBP because of that long wick, and then I probably would say like ES. Yeah, ES probably or NQ. Very strong. We've inverted some very strong things that we would have wanted to see supported if we were going to keep running lower. So either way, I'm really looking. I think this could be a solid week. I think there's at least going to be one or two good setups there. So that's kind of what I'm looking at there. So then let's look at. I think we looked at everything. I'll take a quick glance at gold really quickly, but I think gold is finally in that. I know last few weeks I said, hey, like I don't really want to trade gold because we just been in this like weird wedge pattern, right? Like where the market, you could tell the market was starting to consolidate, right? And this is basically what it was. Um, so now that we've kind of broken out of that, what I want to see is maybe potentially the market support this. Now I don't really trade wedge patterns, right? Like I don't look at them typically like the same way that most people would. Saying if it breaks out here, we just buy, right? I mean, that's okay. But I do look at things from the concept of liquidity, right? And I would like to see the market potentially trade into, maybe retrace a little bit into this future fair value gap. If I go to the 4 hour, you can kind of see this, right? Something like that. So maybe a Monday at 9 o'clock could be a really cool opportunity, right? And I'm looking at a couple levels. The first level that I would be looking at here is this high there, which we call it BSL1. Two. So that's the second level that I'm looking at right there, right? The market trading into this gap there and then taking things higher. I think we do have some decision on gold now, so I think I would be okay with looking for longs like this. Um, Especially since we're starting to check that trend line liquidity right there, right? So a wedge pattern is really just consolidation, right? And you're kind of waiting for the market to kind of give us some type of breakout. And then again, overlapping with the ideas that I teach with liquidity, with smart money concepts, there could be something there over the next day or two. So I'm excited to kind of see how that one plays out. Um, so yeah, so that's all I'm seeing from here. So I will let you guys go, and then as soon as we have any type of um, updates this week, I'll let you know. and then also, sorry, I wanted to review the one trade that I did take last week. Um, just really quickly, uh, the trade that I took this past week, I'll pull it up on Tradeify, and just to give you guys an update. So I did briefly switch back to the future side of things, just because with currencies, I did briefly switch back to the future side of things. Uh, because I was starting to get a little annoyed with the volume that we were seeing on the Euro futures and things like that. So I figured, this would be a really good opportunity just to kind of potentially get some reps on indices again. So I did take a straight to funded account with Tradeify. Again, that's not really an endorsement. Um, I did take an account with them just to see, if I can get a quick payout really quickly from them. Now they have the straight to funded challenge where it's basically you have to make a certain profit and then you get a split of that. But they let you skip the entire funded challenge process. Um, so that was really cool. So I did take one. I plan on getting maxed out with them. So you can see here, I have had 4 trading days. There's only one trading day that's needed. I'm sitting at around $7,000 up, and so I've made it in the last month. I made about $8,000 trading, between the 7,000 here on these accounts, and then the other 1,000 or two that I made on my personal accounts. So took a break from the FTMO account. We'll be going back there though in January probably. So, um, so basically, if you look at the days here, you can see my account stats. I have not lost a trading account yet, so that's cool. But then my most recent P&L was 1976. So I made about $2,000 last week. And if you look at the accounts, I can show you journal, and my strike rate, like my actual amount of trades I'm taking is very slim. I'm taking like maybe 1, 2 trades a week. So pretty much since the 13th of November, I made about $7,000, which is awesome. If you think about it, it's about $84,000 a year, right? Which is again, it's almost a six-figure month or six-figure trading, right? From just taking 4 trades. So 4 days out of maybe 25 or 20 something days. So I took this trade on MNQ and I took it with 10 contracts. So we can talk a little bit about the trade. And I took it on 11/25. So I think it was like Wednesday. I told myself that this was not going to be a very long week. So I was just going to look for one good trade and get out. Not really try to give anything back. Again, shortened weeks, holiday weeks, NFP weeks, FOMC weeks. Your job is really just to get out and call it a week. You're not there to be like in the markets all day. So, and it's a good thing that I wasn't because this did actually reverse later on. So going back to the day, again, coming into the day, we had a bullish bias, right? And so I did say I want to see this invert before it goes bullish. So pretty much the way that I saw the market is that anything trading inside of this civvy here was still bearish. It was still game to be bearish until the market fully inverted this. So if we saw, our potential power through setup going the opposite way, then this could have been the market really trying to run down for the day. So I actually did take a counter trend trade, I guess, but technically in the moment it was still uh in within the trend. So coming to the terminal here, I saw pretty much our clean setup. We had a good consolidation in the Asian range here. We saw a bearish London, came back up to uh the high of the day. I did notice that we did have some buy side liquidity over the Asian range that wasn't taken. So this was not a good setup until the market pretty much ran up at about 7 o'clock towards the end of the London session and came up there and grabbed liquidity. And then pretty much, from there on just fell out, fell over. Um, so pretty much at market open, I saw this play out. It's a few minutes before market open. I ended up uh, pretty much hopping into this trade right here. Yeah, I'm waiting for the macro times, but this trade right here was very open and apparent and respected the market there. So when the market traded back up into that fair value gap, that served as my entry, and we took things not to the low of the day, but pretty much through the to where it netted me about $2,000. Now the thing, because of this consistency rule, Tradeify, my targets again, I think my target was like the second or third uh standard deviation level here. And normally it would have been a more defined target. I think it was the low of the day was actually my target now that I like think about it, because it lined up with the second deviation level. So I ended up taking the trade here and then getting out. Uh, I'm moving my stop up, but then getting out towards the third standard deviation, which was right there. So it did run a lot lower. But again, you got to think about your consistency rule here. So with Tradeify, they have a 20% consistency rule. So I need to make sure that all of my trades are none of my one of my days, my biggest day is only 20% of uh my overall basically profits. And so with the way it currently sits right now, because I did have such a big day, I wanted to keep this about $200 shorter than it did and keep my day under $1,800. But because I did, it moved my whole consistency rate up. And now I'm at like 20, my biggest day is about 28%. So I just need a couple more days of trading to get to kind of knock that down. So I'm hoping like the beginning of November, I'll be able to qualify for that payout. And then I'll take that payout of $3,000 and then probably double it down and buy another four accounts with them, and then just slowly grind it out and hopefully do the same thing again this next month and maybe walk away with a little bit more. So that's what I'm looking at for Tradeify. Um and yeah, it's just a process. I mean, like basically if I can pull this off with a full set of accounts, maybe even five more times the rest of the year. I mean, we're talking like 70, $80,000 a year off of just maybe 5 months of trading. So it's a really cool opportunity prop firms present. So again, this is my first time trading with them, so I'm still skeptical until I see payouts, but pretty much almost there. I mean, we're 7,000. I think I need to get to like 9,000 on the day. So that's all I got for you guys. So I'm gonna go ahead and end the call. And if you guys have any issues, please let me know. So again, this has been great. Thanks. Peace.